Live from Singapore, this is Insight with me, Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. President Trump confirms plans to impose 25% tariffs on all imports of steel and aluminum, broadening his trade salvos and threatening ties with some of America's top trading partners. Trump's also threatening to unveil reciprocal tariffs on everyone later this week. Those comments adding to the already tense sentiment in markets before Fed Chair Jerome Powell's congressional testimony. And promised the Modi's BJP wins control of the Indian capital in a resounding election victory. That's strengthening his grip on the country ahead of this week's meeting with President Trump. Another day, another tariffs being planned. Trump now pledging 25% tariffs on steel and aluminum imports. That's adding to the anxiety to an already nervous market. Taking a look where we are in terms of the MSCI Asia Pac Index, kicking off the week in negative territory, down 0.4%, bearing in mind the S&P was down 1% on Friday. S&P futures pointing to a higher open, though, reversing some of those losses which we saw on Friday. CSI 300 index reversing some of those losses, pretty much flat as we speak right now. The Hang Seng in positive territory, up 1.4%. But we're seeing losses in terms of Asian currencies, in particular the Aussie, 62.59 versus the USD right now, down 0.2%. It is among the countries that's bound to get hit by those tariffs on steel. Again, we're taking a look at the Canadian dollar, the loonie, currently at 143.55 versus the USD, down about 0.4%. Of course, that tariffs planned by Trump, front and center, adding to all the tariffs he has imposed on the likes of Canada, Mexico, as well as China. Now, President Trump says he's going to slam 25% tariffs on steel and aluminum. He says the tariffs will apply to metal imports from all countries, but did not specify when the levies would come into effect. The announcement coming while speaking to reporters aboard Air Force One.
Any steel coming into the United States is going to have a 25% tariff.
What about aluminum, sir?
Aluminum, too.
10%?
No, 25%.
25 for aluminum as well?
25 for both.
And Trump's latest tariff plans come as China's own retaliatory levies on U.S. goods are due to come into effect. For analysis, let's bring in our Chief North Asia correspondent, Stephen Angle, is in Hong Kong. And steel, this is going to be about, what, $14 billion worth?
Yeah, that's right. So they can't do like for like because essentially China sells 3 times more products to the United States than China buys from the United States. So, and they also want to, let's keep this in mind. They also take Donald Trump for his word when he says this is only the Trump administration's opening salvo potentially in a protracted trade war. So they don't want to play all their cards, throw all their chips into the pot right now. So the retaliatory steps that they announced last week were fairly measured. It was on 80-some products worth about $14 billion US dollars. They have export controls on tungsten-related key minerals. They added 2 companies to the entity list. They've appealed to the WTO to possibly mediate talks with the United States. There's a number of steps they've done, but nothing huge. Going forward, though, we are hearing that China is looking at potentially other actions if this goes on. Keep in mind, we've not had a phone call yet between Donald Trump and Xi Jinping either to possibly mitigate these tit-for-tat steps. So as of 12:01 this morning, Beijing time, we're hearing that those retaliatory steps have taken effect. We haven't gotten complete confirmation yet from the Chinese government in Beijing, but it looks as though the the clock has ticked past the deadline, and there's been no comment about any kind of negotiations or any kind of relief. So we must sort of assume that it has definitely happened. But we're hearing as well from other media, including Wall Street Journal, that China is, as I said, they're building up the number of chips or number of cards that they can potentially play down the road. We're hearing that China is building this list of U.S. tech firms for possible antitrust probes. They may target, according to the Wall Street Journal, Broadcom and Synopsys, among other tech companies. We're also hearing the company that was one of the two companies listed last week in China's retaliatory action, Illumina. They are saying that they are already in talks with China's Ministry of Commerce about that entity's list. So it's a moving chessboard right now, and until we have that phone call, if it's ever going to happen, we won't necessarily get any kind of news, if you will, on mediation or remedial steps to lessen the tension between the two.
And as we await for that elusive phone call, Steve, we know that Chinese companies are keen to take action to protect themselves against those tariffs. Shein, for instance, asking some Chinese suppliers to diversify to Vietnam. Of course, this has to do with the supply chain disruptions that are pretty much anticipated. Tell us more about that.
Yeah, that's a story that just broke within the last hour or so, and sources are telling Bloomberg News that this fast fashion retailing company that obviously has grown exponentially in the last couple of years, selling directly into the United States through the de minimis exemption, where Chinese e-commerce players like this one, as well as Temu, can ship directly to U.S. consumers without going through customs clearance, without paying duties and the like. That's the de minimis exemption of $800 that Donald Trump, it's been on again, off again, but he is basically removing that loophole. They've suspended the exemption for right now. They've frozen the steps to remove the exemption because the U.S. Postal Service and other logistics companies in the United States simply cannot handle the sheer amount of packages, 1.4 billion packages, 4 million a day going into America under that exemption. So what we're hearing, though, those e-commerce players, like you just mentioned, Shein and others, are looking at possibly diversifying their sourcing of products to ship to the United States. And the story now is that Shein is contacting manufacturers in Vietnam and also offering some incentives there to get some of the production there to be able to potentially ship those products to the United States and do another workaround. Yet to be seen, though, whether this exemption of the de minimis loophole actually covers all importers to the United States, not just China. There's so much to talk about.
That's right, and this is what they call the China Plus One and China Plus Two strategy. Countries like Vietnam, like Malaysia, stand to gain from that. Bloomberg Stephen Angle in Hong Kong, we thank you so much for that. Now let's get to our own Martin Ritchie. He joins us from Shanghai for more on Trump's steel and aluminum tariffs. Martin, we're talking about 25% tariffs on steel and aluminum, quite a major escalation in terms of Trump's tariff policy.
Yeah, that's right. Echoes of the first Trump administration here, when steel and aluminum were obviously some of the highest profile targets of trade measures. So what we've heard is Trump is saying 25% on basically all imports of steel and aluminum into the US. No timeline for this suggested yet. And we'll have to see whether there will be any exemptions, see if there's any more details to come on this. But it does represent, an escalation for these industries. There are tariffs in place already from the first Trump administration, but this will bolster those protections. And look, it's going to affect trade again with some of the countries we've already talked about this morning, Canada and Mexico. For both steel and aluminum, Canada is the top supplier. Mexico is also a major supplier of steel and aluminum to the US. So yes, this is a big move for those industries.
We know that Asian trading partners, the like of Korea, will also be hit. Talk to us about the extent of that hit, potentially.
Yeah, that's right. So as I said, some of the neighbours are probably the biggest casualties, potential casualties, I guess, but also in Asia, South Korea, Japan, also major exporters of certainly steel to the US. China is a little bit of a different story. China's exports to the US are a little bit less significant, especially because you've already had a lot of quite high tariffs in place already. But overall, this is definitely sort of negative for sentiment in these markets, although it might take a few days for investors to digest exactly what this means, whether material will get rerouted to other markets from Canada, from Brazil.
Martin, thank you so much for that. Bloomberg's Martin Ritchie in Shanghai. Speaking of sentiment, yes, Asian stocks currently in negative territory. For more on the impact of Trump's tariffs on markets, we're joined by Polka Mishra, partner at Javelin Wealth Management. Polka, good to have you with us. Another day, another tariff, and it is really hard for investors to take a longer-term perspective when there's no clarity in how everything is going to play out.
Yes, it is. Ironically, though, I think longer-term perspective is the way to go. You've got to have your noise-cancelling headphones on and just ride through the noise, because we heard the tariffs this morning. We had the same announcement about Canada and Mexico, and it was reversed within the week's time and given more leeway. So we have to figure out whether it is a negotiation tactic, whether he really means it. I think it's very hard to fathom that that level of tariffs can be imposed on steel without a significant negative impact to the US itself. So yes, I think longer term fundamental focus helps, because then you can ride out the wall, because trading based on what Donald Trump is thinking on a daily basis is extremely hard.
But even if it is a negotiating tactic, whether it's 25, whether it's 10, whether it's 5, it's still inflationary. We're already seeing how the dollar is stronger, 7% up since its low back in September. We're looking at a stronger dollar on a longer-term basis.
Oh yes, dollar strength will continue through the year. Whether it strengthens excessively further or whether it stays here, it's still hard for emerging markets. It's still hard for Asia. Actually, it's hard for every other geography in the world. Europe's trying to cut rates to stimulate the economy. Same for BOE has been going aggressive with rate cuts. We've seen that divergence. We see India trying to protect its currency. Korea is struggling. So yes, dollar strength hurts, but it also hurts the US. And that's the part that is not being factored in right now, because you say, yes, you want to onshore, but US is not in the same place as it was when he imposed the tariffs last time. So when steel tariffs were imposed last time, it actually helped the profitability of the US steel companies. But inflation was sub 2% then. Rates were sub 2%. We are in still a high interest rate environment. Consumers are struggling. To just build the supply chain to onshore is going to take 3 years. So who's going to bear the brunt of the inflation? Is going to be the consumer, whose savings are already dwindling. We've seen consumer confidence come down. So it's not as easy to implement as it is just to say that on a flight. I think.
Don't you believe what Scott Basson said? He said that even if you impose 10% tariffs, and if the dollar were to rise by about 4%, it kind of compensate for that inflationary pressure, and it's going to be okay for the US economy.
It is not. So there are metrics that you look at when you're calculating inflation. Then there's the real inflation that the consumer is facing. Rates are high. Your mortgage rates are high. You still need to service your mortgages. Credit card delinquencies are increasing. So those attributes cannot be ignored. US consumer savings has dipped from the records of COVID down to 4% now. Compare that with UK and Europe, that is around 10 and 14%. So something's got to give at some point. At some point, investors will say, I want to get paid more to hold US treasuries. Consumers are going to say, okay, I'm not going to spend as much. And we've seen that with China. We've seen that with India or Europe. Once consumer confidence drops, it's very hard to build it back. So yes, the US dollar strength will help a bit, but the inflationary pressures are much higher. I mean, we've seen how difficult it has been for Fed to continue to cut rates.
So something's got to give.
Yeah.
How much of a give will we see in the equities market? What happened to that U.S. exceptionalism story?
So U.S. exceptionalism is still in play. We saw the results, Q4 results were fairly solid. But what investors are now beginning to think is that, is there an expiry date to that U.S. exceptionalism? And are these policies going to bring that forward? And then secondly, for how long am I willing to pay the premium for that exceptionalism if it is going to drop off? Now, we're talking about trade almost on a daily basis because of the tariffs, right? But out of the top 10 fastest growing trade routes in the world, US is part of only 2 of them. China is part of 7 of them. And one of the 2 routes in which US is Vietnam, which it considers a China proxy. So the world is learning to diversify a bit away from US. It is still very strong. It is still very important. It is still very central. But I think we're more prepared. China's more prepared for these tariffs. And that's why we've seen, okay, a wait and watch approach. We don't need to react to everything right now. So I do think that the world is going to figure out, it is going to hedge out. And arm twisting is going to take you just so far. DeepSeek is a perfect example of that.
So it means that as a consequence, traders will also be looking at diversifying and perhaps have a strategy that's different from what they're adopting currently. Is that a fair assumption to be making? Should they be looking at increasingly markets in this part of the world as they benefit from disruptions in those trade routes?
No, absolutely. You have to survive, right? Well, from an investor's perspective as well, we are looking at opportunities where there's a bit of a tariff hedge, so to say. India, for example, Indonesia, these are more domestically driven markets, so there's more investment going there. Japan is a fundamentally strong story, but a little more exposed. So you look at more domestic sectors over there. You look at the non-trade, non-export related industries more. But yes, we have to diversify against it. And in the long run, it may be beneficial because it just broadens the playing field a little more.
Speaking of India, let's take a listen to what JSW had to say about the tariffs being imposed by the US.
As far as steel is concerned, I think as far as India is concerned, there are already tariffs in place. Most of the countries already have safeguards into the United States. So there is hardly any exports from, let's say, India to US. It may impact certain other countries, but I think China's direct exports of steel is also limited. We'll have to wait and watch how the tariffs play is announced by the Trump administration.
Even as we talk about, waiting and watching how this is going to play out, there are likely to be winners. And we heard how India may just, escape unscathed.
Yes, it is. And it's good timing for India from that perspective. The budget supported growth. Reduced taxes for the middle class. It's in a strong position, able to manage the rupee as well fairly well. And we saw the rate cut as well finally come through. So yes, India definitely is a beneficiary in all this. And US's trade deficit with India is very small. So it's less liable to be tariffed by Trump. Modi's traveling, meeting Trump next week, I think. I think they've had a pretty decent relationship in the past. Ishiba actually paved the way, showed how to deal with Donald Trump and how to work with him. And I think a lot of the global leaders are going to try the same approach.
Speaking of winners and losers, which other Asian currencies might just be in a better position to ride through Trump's 4 years?
Currency is a bit difficult, but ironically, Japan, the yen. We have seen yen continue to strengthen. The Japanese revival is now on a more solid footing, so we will continue to see rate increases happening. So that does support Japanese economy. I think that is one currency you can look at. On the whole, though, most of the Asian economies will allow for their currencies to weaken in order to support growth. So currency will be a second consideration. Not losing momentum will be more important for Asian economies.
How strong do you think the yen might get by year end?
By year, I mean, look, Japan is not going to want the yen to strengthen too quickly, so they'll like it to be range bound, 145 maybe, but not much lower, not lower than 140, because it really impacts the exports, it impacts tourism. So they're going to want to strengthen the yen only very slowly.
And on the other hand, the PBOC is showing more willingness for the yuan to depreciate from here.
Yes, absolutely. I think some of the some of the conversations we are hearing from China, they're more conducive for growth. They're finally giving in to what is needed to propel the economy, focus on consumer, let the currency depreciate a bit. They need to do that. There is no other way. They still need to revive the real estate sector. They need to stimulate the economy, and it does need to be, if not a big bazooka, a small bazooka at the minimum.
Polka, thank you so much for that. Polka Mishra of Javelin Wealth Management. She will be sticking around. Of course, we continue to track Trump. We're also continue to track the Super Bowl. We have a winner right here for the Philadelphia Eagles, beating the Kansas Chiefs 40-22 to win that Super Bowl. We know that it is a much anticipated game. Kansas City Chiefs taking on the Philly Eagles at the Caesars Superdome. We have a winner for the Philadelphia Eagles beating Kansas City 40-22. Of course, last year we saw the Chiefs winning again the San Francisco 49ers. There you have it. A lot of celebrations right there. Of course, we had reports of Taylor Swift being at that Super Bowl to cheer on her boyfriend, Travis Kelce. Well, still ahead this hour, promised Narendra Modi's party not just a rare victory in New Delhi elections. We decode his continuing popularity, plus his upcoming meeting with President Trump with Michael Kugelman from the Wilson Center. Keep it here with us. This is Bloomberg. Welcome back. Here are some of the stories we're following. Israel has pulled troops out of a belt of land in the Gaza Strip after recovering 3 more hostages. With the initial truce period half complete, mid-level Israeli envoys have set off for a new round of talks in Qatar. Any full Israeli pullout from Gaza will have to be negotiated in the second phase of the deal, along with a Hamas handover of remaining hostages. Meanwhile, Saudi Arabia has once again dismissed a proposal to resettle Palestinians from Gaza in Saudi Arabia. In a statement, the kingdom says the Palestinian people have a right to their land and are not intruders or immigrants who can be expelled. Israeli Prime Minister Benjamin Netanyahu last week suggested a potential Palestinian state on Saudi soil after President Trump said he wanted the U.S. to take over Gaza. And President Trump has suggested that Elon Musk's government efficiency team has found irregularities while examining data at the U.S. Treasury Department. It's unclear if the issues stem from government debt or payments processed by the Treasury. Musk's so-called Department of Government Efficiency has been seeking access to Treasury payments data. In the markets, we're keeping a track on Asian miners, the likes of BHP, Rio Tinto, Nippon Steel, as well as Hyundai Motor. They're under pressure after U.S. President Trump said he will add 25% on all imports of metals on Monday. BHP currently down by more than 1%. Hyundai Steel currently lower by 2.5%. By the way, the tariffs will apply to imports from all countries, and that's what Trump said to reporters on Sunday. The latest steel and aluminum tariffs are part of a broader, more gradual approach to trade policy rather than a single immediate shock. We're also keeping a track on Asian FX. On the back of that, we know that the dollar has been trending higher, up for a second day. It is up by 7% since the low which we saw in September. The yen down by 0.4% versus the USD. Losses too for the Chinese yuan, as well as the Canadian loonie. Of course, these are the countries expected to be greatly impacted by those 25% tariffs on steel and aluminum. Still ahead on Insight, the Wilson Center's Michael Kugelman will be joining us as we look ahead to Prime Modi's meeting with President Trump. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. We're counting down to the India Open, 15 minutes before India starts its trading day to join Asia, which is under pressure on the back of those tariffs that Trump plans to impose on steel and aluminum players around the world. No one is spared. It is impacting every single market. Nifty futures pointing to a higher open, up 0.3%. The Indian rupee currently trading down by 0.6%. We know that the Indian currency has been trading close to record lows. Of course, Indian assets trading as investors digest the trade cut by the RBI for the first time in years, and of course on the back of that budget putting $12 billion in money into the pockets of the middle class. Taking a look where we are in terms of two-year yields at 6.59, 10-year yield at 6.70 at this point in time. Now, Indian Prime Minister Narendra Modi's party, the BJP, has swept into power in the city of New Delhi for the first time in almost 3 decades. The win could indicate that the tax cuts in this month's federal budget has won the approval of middle-class voters. The victory comes ahead of Modi's visit to Washington this week. A government reporter, Sudhi Ranjan Sen, joins us now in New Delhi. Sudhi, what does the Delhi election result mean for Modi? We know that this is the third win in 4 months.
Well, I mean, internally it just shows that Prime Minister Modi, and his party is equally popular, and as a politician, Prime Minister Modi is strong, and this is important because after the general elections last year in June, where Prime Minister failed to win a majority on his own and had to depend on coalition partners, there were questions that were being raised about how long the Prime Minister's leadership is going to continue. Now, these 3 victories in a way kind of put those questions aside and give him that aura of a leader who's continues to be popular and continues to be well loved, and therefore there is no alternative to him, and also associated with the fact comes the fact of policy stability and stuff like that. So it's an indication politically that he remains strong, and for business and markets that there is going to be no change in policy suddenly.
Sudhi, of course, all on the back of Modi visiting D.C. this week. What are the key issues on the table? We know trade for sure, defense as well, no?
Yes, defense would be one of the big things. We have heard President Trump very clearly saying that he wants India to buy more from the United States, although India has been buying more defense items from the United States in the last decade. There is a request, so to say, from President Trump that India should up the intake of defense items. Trade, of course, very, very big because the United States is India's biggest trading partner, and importantly, it has a trade surplus, with President Trump threatening tariffs on his, on China, and there are tariffs on neighboring countries and, close partners of the United States. Prime Minister Modi would want to assure President Trump that continuing with the relationship of, in India's relationship with the United States is going to be beneficial for the U.S. and therefore avoid a trade war. That is the basic and the most important, agenda on Prime Minister's table as he leaves for the United States.
Sudhi, thank you so much for that. Our government reporter, Sudhi Ranjan Sen, in New Delhi. Well, joining us now is Michael Kugelman, director of the South Asian Institute at the Wilson Center, and Polka Mishra, partner at Javelin Wealth Management, is still with us. Michael, let's start with you. I mean, a lot at stake for Modi as he makes his way to D.C. We talk about trade, we talk about defense as well, and it comes at a time when Modi is trying to revive his own support at home and an economy that's been pretty sluggish.
Right, absolutely. It's a really big trip. It is notable that Modi, I believe, will be just the 4th foreign leader to meet with Trump since Trump took office as president, which I think reflects just how important India is seen as a partner by the Trump administration. But yeah, I mean, these are 2 leaders that have a very strong rapport. It goes back nearly 7 years when they first met in 2017. They've got a very strong chemistry that I think is bolstered by their their shared views, their shared worldviews, their shared politics on many levels. And this is a very deep strategic partnership. But I would argue that we will see the more transactional side of the relationship during this visit, because I think both leaders, especially Trump, will come to the table with a lot of asks on trade, on energy, on immigration, and many issues. So it should be a very productive meeting and a very productive visit, but it will involve some challenges and perhaps some difficult moments as well.
Despite the strong rapport that you talked about, I mean, it didn't stop Trump from imposing tariffs on India during his first term administration. I'm just wondering, this time round, how much negotiating power does Modi have, given, that India is a counter to China?
Yeah, I really think that New Delhi has been very clever and very savvy in terms of how it's gone about its relationship with the Trump administration over its first few weeks in power. Indian officials had signaled publicly from the start that they would be willing to lower tariffs, and indeed they have done that in some cases. Now, Trump might ask Modi for more of that, and indeed there is a pretty sizable trade imbalance that works against the United States. But indeed, I think the strategic dimensions of the relationship, the strategic imperatives of the relationship, make it unlikely, I think, that we're going to see Trump announce new tariffs on India, even though for quite some time he has viewed India as a top candidate to receive tariffs. He's referred to India as the tariff king on several occasions in the past. But I think the fact that India had preemptively made clear that it was willing to address these tariff concerns, that could bode well for the relationship. And honestly, Prime Minister Modi might come to Washington and make a pitch to Trump for some type of negotiation toward an economic partnership accord that would enable both sides to lower tariffs.
Polka, how are investors looking at Modi's visit to the U.S.?
I think generally very positive. Everyone is aware that they share a very cordial relationship. India has done well on its diplomatic relationships with U.S. in recent history. It is coming in at an important point. As you said, growth, I wouldn't call it sluggish at 6 to 7%, but yes, less
but versus 8.2%.
Yes, versus 8.2. So I think it is important that nothing dents the recovery that the Indian government is trying to make and what we see from the budget. So it's quite a critical visit at this point, and it'll set the stage for the rest of the 4 years of relationship with the United States.
Is there a way of positioning for Modi's visit for investors? We know that Modi's after investments in nuclear power projects, for instance. Is there a way to play that?
Quite unsure. I mean, he's looked at as a very pro-business leader. He is going to do the deals that are needed for the business community of India. He's going to do the deals, I think, on the defense side more, because that's something that Trump has talked about. He's going to give enough, I think, to Donald Trump to make it look like a partnership where both benefit. But yeah, on the whole, I think overall it's just going to settle the stage and not get blindsided, not be in a position where you end up being blindsided by Trump saying, okay, I don't like this, so 25% tariff tomorrow.
Michael, what do you think India wants from Trump specifically? I mean, the fact that Modi made concessions even before this trip, I mean, even wanting to repatriate 18,000 illegal immigrants, I mean, the first batch coming through back home, 200 of them just last week. I'm just wondering, why do you think the posturing is such for Modi?
Right, it's quite notable given that India has a very confident nationalistic foreign policy. So for Indian officials to come out of the gate so quickly after Trump takes office, offering to make all these concessions, I think it's striking, and I think it reflects how important the relationship is, as seen from New Delhi. I think that's a big part of it. But also, I think India, given this precarious economic moment that we've discussed, I think that it really does not want to face the prospect of a new round of tariffs from the Trump administration, as it saw during Trump's first term. But no, I mean, India will come to the or Modi will come to the table with things that he will want to see, that he will want to get from Trump as well. And that includes, indeed, perhaps making a pitch for the U.S. to invest in India's nuclear energy sector. You now have a new nuclear energy mission that's recently been declared in India. And I think India recognizes that Trump will not want to encourage investment in solar and wind power in India, but I think that nuclear energy might be seen as something a bit safer, so to speak. I think there'll be other issues of concern. I think that the issue of Iran will loom quite large. The Trump administration came out with this new maximum pressure policy on Iran the other day. A document was released, and it indicates that there might not be any more sanctions waivers for those doing activities, business with Iran, including at the Chabahar port. And India is partnering with India to develop that port. So I think that Modi might want to get a better sense as to where India stands in that regard. So yeah, I think that Modi will definitely come to the table wanting to see clarity and a number of asks from Trump. This is not going to be a one-way thing where you have Trump making all of these asks of Modi. It's going to be a two-way street for sure. And that's what you'd expect with a deep partnership like this one.
We know that Modi's also talked about the willingness to buy more energy from the U.S., also more defense equipment from the U.S. What kind of defense equipment, what kind of collaboration? Because not too long ago, he did talk about, having a closer relationship in defense as well. What is he after?
Well, I mean, I think there's been a lot of talk for quite some time about various forms of weaponry that the U.S. would like to send, that would like India to buy, including drones and things like that. So yes, I think that there will be some discussion on that, though I would actually think that energy, from Trump's perspective, energy is going to be a bigger focus area. He really wants India to buy more American oil. And I'm sure Trump would recall that just 3 years ago or 4 years ago, in 2021, India was the top destination for American oil exports. Now, of course, when Russia invaded Ukraine, the global energy market changed in a big way, and India started importing a lot of cheap oil from Russia. But I think that Trump would like to return back to how things had been several years ago. I think the challenge for Trump and his administration is to make available enough oil, enough energy at a price point that would work for India, just because it's long depended on much cheaper oil from the Russians.
And in terms of India's economy, it's seen quite a boost when it comes to the RBI cutting rates to boost growth. We saw how, the budget will put $12 billion into the hands of the middle class. How do you see this playing out? And as an investor, where are the opportunities?
As an investor, we are definitely very positive in India. This boost was much needed because investors were beginning to question India's growth potential. So, but if you look at sectors, still infrastructure remains a favorite. I think services will continue to recover, and even if the rupee weakens, it becomes cheaper for US as well to buy Indian services. I think there are smaller pockets of investments like commercial vehicles. The demand for commercial vehicles has increased a lot in the rural sectors driven by the development. So that's where you would look for opportunities. And if you look at healthcare insurance, just by the design of where the Indian demographic is, that is a sector that is going to continue to grow.
Of course, some people are saying that this is not one and done. There'll be more rate cuts down the year in 2025. Can the RBI continue to cut rates when, the rupee is close to record lows?
This is where the tricky part is from the budget. I know everyone is happy about the budget, but it's a conservative budget still. I think the government is targeting a 4.4% deficit by next year, which means it's going to absorb around 4.5% of the GDP. To support that, that means that money is not going to get invested to propel growth. So that's the tricky part. And so far, private investments have not come through. A big part of India's growth story has still been the public investments. So is the government going to have to change that stance and let the deficit stay a bit higher? I think they're focused on macroeconomic stability, and which is the right thing to do in an uncertain environment. But that could actually dent the growth, and they may have to reject that policy or that thinking through the years.
And Michael, of course, we know the budget was to boost not just the pockets of the middle class, but also to boost Modi's own voting base. I mean, now that he's won Delhi, which is the third win in the last 4 months, do you think he's on his way to regaining the votes that he lost during the election?
Well, yeah, he's well on his way. I mean, let's keep in mind that that the national elections last year delivered a major setback to the BJP. The fact that it now needs to govern with a coalition for the first time ever, that's pretty significant. But indeed, I think that the BJP is in a very good place now. I mean, the fact that it dispatched a rival party from power in New Delhi, and the fact that it won an election in New Delhi for the first time in nearly 30 years, that gives the party and Modi a lot of confidence and a lot of momentum as he comes to Washington. Though, you look at certain issues, persistent inflation, unemployment, particularly youth unemployment, those are still issues to work on. And I think that those will need to have continued work and progress in order for the BJP to feel confident that it is going to be in a good place electorally as we move on to the next few years.
The question really is, what can Modi and the BJP do to revive, for instance, in the case of what you pointed out, unemployment? I mean, 30% of grads are still without jobs. I mean, what would you like to see? How can Modi address this issue?
Well, I mean, there's a lot of work that still has to be done. One is you just need to create more jobs, particularly for all these new grads focused on tech and so on. There's a lot of demand, and certainly there's a lot of supply, but you need even more supply to meet that demand for sure. More investment in some of these high potential spaces, such as clean energy, for example. And I think these are areas where more work has to be done. But this is not something that could be done instantaneously. But indeed, looking at the performance of the BJP in these recent local or these recent state elections, I think that does suggest that the base is coming around, and that the BJP is in a much more favorable position now than it was last summer when it suffered that considerable electoral setback in national elections.
Polka, do you see foreign funds returning to India? Because at one time we talked about that rotation from China to India.
Yes, and then we had the rotation from India to China in September. So yes, foreign funds would continue to come back to India. It doesn't impact India market as much because it's still the domestic investors that drive the market. However, as we see more tariffs come through, as we see more uncertainty, it remains a slightly protected safe haven. Indian bonds and government bonds are actually looking attractive for investors as well. So yes, the capital flow will come through. It'll trickle in. It can move out very quickly if we see a revival in China again, because it's still that pocket of investment that is allocated to Asia that gets split between India and China. But slowly, India is becoming a clearly demarcated asset allocation pocket for investors in its own right now. So yes, it will increase.
With 1.4 billion people, it certainly can rely on its domestic market. Thank you so much for that. Marco Kugelman, Director of the South Asian Institute at Wilson Center, and Polka Mishra, partner at Javelin Wealth Management. We thank you so much for your insights today. Well, Indian markets have been trading for about 2 minutes now. Let's take a look at the early numbers off the gate. Of course, we have Asian markets under pressure on the back of those 25% tariffs that will be slapped on steel and aluminum. That's impacting a lot of sentiment in Asia today. Sensex down 0.4%. Losses too for the other benchmarks, including the Nifty Bank Index down about 0.3%. Asian currencies under pressure with a strong dollar. It is up by 7% from that weak level we saw back in September. It's been a mighty dollar story. Indian rupee 87.92 continues to be under pressure, down 0.6% as we speak. Now, still to come, President Trump becomes the first sitting U.S. president to attend a Super Bowl. We'll look at the signals he's sending next. Keep it here with us. This is Bloomberg. Talk about massive celebrations. Take a look at those numbers out there. The crowds, Philadelphia Eagles fans, they are celebrating after their team won the Super Bowl, spoiling the Kansas City Chiefs' bid for a three-peat. And of course, we know that even Taylor Swift's presence couldn't help the Chiefs. The Eagles beat the Chiefs 40-22. And you know what? President Trump was there, becoming the first sitting president to attend a Super Bowl in the event's 59-year history. To talk more about the game and Trump's appearance, let's bring in News Desk editor Jill Deeses. Jill, put this in perspective for us. It was a massive victory.
Yes, it was. I think that if you were an Eagles fan, you probably really enjoyed that game, considering they led early and then effectively were on track at one point for a complete blowout before the Chiefs were able to, score some in the back half of the game. I think when you're looking at this from a political perspective, looking at that Trump visit, that to me was pretty remarkable, because you look at this in contrast to last year when, Joe Biden actually didn't even do what's a pretty traditional pre-Super Bowl interview with the press. We not only had that out of Donald Trump, but we also had him attending, half the game. He did leave at halftime, and I believe was rooting for the Chiefs at one point, or at least that's what he said in the lead up to this game. But it does kind of show you just, how significant this game it really is in the public consciousness. The NFL is just such a juggernaut within American media. These types of broadcasts, just blow pretty much everything out of the water. I'm sure, once we actually get some of these rating numbers, usually at some point during the U.S. Day Monday, we'll see just how many people were actually tuned in. But yeah, it's a cultural juggernaut, somewhat becoming a political one as well. It's, really a huge thing to see here.
Jill, we know that Trump actually has a history of involvement with the NFL, right? That perhaps shows the interest that he's showing right now.
Yeah, look, I think that, as when it comes to a lot of things, generally, sort of pop culture related, Trump has kind of, finagled his way in there, many points. He does often kind of riff on things as well, whether it be like sort of the controversial, prior history, whether that be on, political fronts, news fronts, what have you. So it doesn't really surprise me there. But again, I think that, when you're talking about what's really, one of the most watched, not the most watched events in, broadcast television in the United States, it does make sense for a president to kind of get involved here. As we were just chatting about a couple of minutes ago, the president does traditionally participate in an interview ahead of time. It's really that opportunity to put the president of the United States in front of the general public in America, in a really, really big front and center way. And so I don't really think that it's a huge surprise that you're seeing Trump participate and kind of weigh in on that front. I think that, just sort of the added, extra flavor here, though, is that you've also got Trump kind of contributing to, sort of a more chaotic scene here with, some of his comments over the weekend, and really just, leading up to the Super Bowl about 25% tariffs on steel and aluminum. I'm sure we're going to get more from the president and the Trump administration throughout this week, but does kind of cast a lot of that into perspective as well. Just the difference between the game here and then obviously, the president also rolling out some really, really big, uncertainties over economic policy.
That's right. Excitement and chaos all at the same time. Jill, thank you so much for that. News Desk editor Jill Deeses there, coming to us from Hong Kong. Before we go, let's take a look at how Asian benchmarks are doing under pressure on the back of the 25% tariffs on steel and aluminum that Jill just talked about. We're seeing pretty much losses across the board. And of course, bear in mind, before we go, here's a look at our exclusive guest for tomorrow. Keep it here with us. This is Bloomberg.